Hi everyone, and welcome back to the second episode of analyzing banking transaction data with Tableau. Alright, in this episode we are going to cover everything that deals with manipulating data. So as you can see from last episode, we did all this using one data source. So today we are going to explore different ways of working with data sources. We are going to explore how to replace data, how to create a new data source, how to join data, how to relate data, and how to create unions. It's okay if that doesn't make any sense. We'll go over each one of the types and discuss how they are all helpful. And today we are going to discuss how they are all helpful. Let's go back to our analysis. So as you remember last time, we did all this from my Chase Freedom credit card. So that was like 2 weeks ago, right? So let's say that we have had more transactions since December 11, 2020. How are we going to replace the new transactions we got? So let's say we got an identical report or identical in the names of the headers, and we want to get rid of our data. We could simply just replace our data using the data source tab, going to our current file, which is Chase Freedom 12/11/20. I clicked edit connection, and now we're going to click our most recent Chase Freedom transaction, which was the 27th. Okay, I'm going to click open, and now it should be updated. However, as you can see, we still have the same number of columns, meaning that there are no December transactions. And the reason why there are no December transactions is because I canceled my Chase Freedom card because I was paying in a parking meter and I lost my credit card. But it turns out I inserted in the parking meter and it never got out. So I canceled that card for nothing because I ended up finding it. And since I had to cancel it, I had to use a different credit card. So now that we know that we want to merge two different data sources, right? We want to merge our Chase Freedom card from the new card that we've been using for those 2 weeks that we didn't have the Chase Freedom card. We are going to merge our Chase Prime, Amazon Prime credit card transactions. So the way we are going to do that is by creating unions. And unions are very helpful if you have the same type and number of columns in each of the data sources. So it'd be like stacks of tables that have the same data, right? That is what unions are good for. So the way we are going to do this is by getting our prime and just drag it over until it highlights our data source and it turns into an orange thing that says union. Okay, perfect. Now we drop it there. And now I created empty columns. See, we don't want that. Let's get rid of that. Let's do Control Z. Let's convert a union. Okay, so we right clicked and put convert a union, and now we're going to put our prime data in there. And now we're going to click apply, and see, now we have the same number of columns. I'm going to put OK. And now our dashboard should be updated with December data. Well, if you can remember, we only had November. Now we have an extra month, December. Okay. And the reason why I wasn't spending that much money in December is because I lost the Chase credit card. I don't know where I lost it, but I've been monitoring it and no purchases have been made. So I think I still have it. But if I don't find it in a couple of days, I'm just going to cancel that. So yeah, it's been a really rough month with me and then credit cards. I keep losing them. Right now I'm on my third credit card. Okay, I'm gonna stop ranting. Okay, let's go back to our analysis. Now that we have showed you how to create joins, we are going to start our graph making. Okay, now time for the fun part. Since last time we were looking at our credit card data, now we are going to be looking at our banking account data. And the way we're going to do this is by adding a new data source, because we don't want our credit card transaction. So The way we are going to do this is by clicking data, going to our current data source, and now we're going to add a data source. Now we're going to add data by clicking the data tab, going to need the new data source, and we are going to go in our files, since it's a CSV file, and go into the right tab, which should be, don't laugh, get our banking transactions. Perfect. Now we loaded our data. We have our details of our transactions, whether it's a credit or debit. We also have our posting date, our description. What do we have here? Check, credit, and debit. Okay, so it's not only D-slip. Okay, we have all that. Okay, we don't need that. Posting date, description, amount, type, okay, debit, chase. Okay. We could probably use this column to find our debits and credits in terms of accounting. We have our balance, check slip, F8. Okay, these two don't matter. So you have 1, 2, 3, 4, 5, 6, 7, 6. 6 juicy columns. Okay, now let's start. We're pretty much going to do the same thing we did last time. We are going to get our date. I'm going to post it here, and we don't want our year. We want it in month-to-year format. Okay, perfect. And now we also want our amount. And since we want bars, let's go over here in the marks in the left side. Hit bars. Now that we have our bars, we can see our net amount in each month. So I had a pretty high month in March 2019. That was when I was getting FAFSA. And then I spent all that much money in credit card and probably school. And then it evens out a bit. So this doesn't really tell us our cash inflow or cash outflow. The way we are going to do this is by looking into our credits and debit amounts. You're probably wondering, what is a credit and debit? So if you are an accounting nerd, you already know what I'm talking about. But to those of you who don't know what it is, I'm going to give you a quick finance lesson. So you could put that in your resume too, that you know basic accounting. All right, so a debit is just a word for addition or subtraction, right? Depending on the circumstance. Since we're looking in our equity account, my banking account, it is a decrease in liability or equity. Okay, so debit is decreasing. So think of debit as minus sign. So a credit should be the opposite. So it should be plus sign, right? So it says increases an equity account. So credit plus, debit minus. That's all we need to think about. And which one of these columns would tell us that? Let's go back to our data source. And it's obviously not details because we have check. We don't know what type of check it is. D-slip, credit. So it's not our details, unfortunately. And the only other thing that it could be would be our type. But you see how our type is not in terms of debits and credits. We are going to have to do that ourselves. And the way we are going to do this is by grouping. So let's go. What was that name of it? What was the name of that column? Type. Okay, let's go back to our sheet and look for our type column. And when we see a type column, we're gonna right click and go to create group. Now we're going to sort these out and put them into our respective debits and credits. So let's see everything that is obviously a credit. We'll put it to our credit group. All right. So clicked on ACH credit, ATM deposit. Right. Check paid. No. Chase to partnership. No. Deposit. Fee transaction. No. Miss credit. Okay. Partnership to Chase. Quick pay credit. Okay. Is there anything else? Account transfer. Account transfer. We don't know what account transfer might mean. think account transfers are mostly negative, so we'll put that on debit. Now we'll create our separate we'll label that differently so we see what our account transfers are, but they're usually debits. So we're going to create our group, and here's the name. So we're going to type in credit, just leave it credit. Okay, credit. Okay, debit, ATM, Chase to partnership, check paid, debit card, fee transaction, partnership to Chase, quick pay. Okay, that's all debit. Let's group that into debit. Account transfer. We could put that in debit too, but let's see what happens. Let's hit apply. Now we have our type group, field name. Let's put that. Let's call it accounting terms. Okay. Obviously didn't finish spelling that because I'm too lazy and I can't spell. All right, let's go back. Let's see, accounting terms, perfect. Now we're going to drop it in our colors. All right, now we have a nice looking graph. Well, like I said, account transfers, those are usually negative. So we could have put that in our debits, except for here. I don't know why it's positive. Maybe it gave our money back. Oh, maybe I got the Chase promotions and I got my money back. I don't know. Let's just leave it there. Yeah, that makes enough sense. Okay, so now in this graph we could see our money, our cash inflows and our cash outflows, right? Everything above 0 is our cash inflow. Cash outflows is everything after 0. Okay. Now we see that we got $5,000 in a month. That's because of FAFSA, guys. And I haven't told you this is my real data or not. So this may or may not show my finances. Okay, so take this graph with a grain of salt. I may or may not be making this much money. Okay. Now that we have our graph, we could analyze pretty much how much money went in the account, how much money went out, and sort of what purpose. Debit. So I think debit would just be transactions. Anything that is not an account transfer. An account transfer would be anything that pays bills. So I imagine it'd be anything that's car related. Yeah, anything that's car related, paying off a credit or debit card that is not here would go into account transfers. So what does this have to do with our credit spending? Well, we could graph out a line and see how much money is going back into paying our credit card debt, because that accumulates interest and we want to make sure that we are always in the clear. So how are we going to do that? Well, unlucky for us, it's in our Chase Freedom tab over here, which is different from our banking account. We can't really use that unless we link it by description and we link it by type. Would linking it by description work? Let's try it out. So this way of manipulating data or joining data is called relating. And we are using this field, the description field, for linking. So both of the accounts have a description field. And let's see if our amount actually transfers over. So as you can see, the description field wasn't a good indicator. And, that's rightfully so, because this probably has really weird descriptions. They're just the same name of the accounts. So in order to join our data sources, we are going to need to find a way of creating a key column, right? In SQL, this is referred to as our unique identifiers, our unique keys. And since we only want it in terms of month, we could probably make our month the unique identifier, right? Our key column that both of them could join. So we put November, what is that? 10, 10, 18, And then for January 2020 could be 120, 1-20. That could probably join all of that together. So the way we are going to do this is by tinkering with our calculated fields. All right, we're going to use our transaction date for this one. So we are going to right click again in our data source tab and put create calculated field. Create calculated fields. And we are going to turn this into our month. So just like Excel formulas, I think most of you guys know what Excel formulas are, right? We pretty much created an equation over here. So we're gonna get the month of our transaction date, and let's see what happens. Right, we got the month, the 11th. So now we want our dash, right? Our slanted line. So we're gonna put plus, hit apply. Oh, this has errors. Can't add integer and string values. So pretty much this will be an integer value. This will be a string value. The only way we could add is if they become the same type. So since we don't know how to add squiggly lines, we're gonna turn everything to string. If you can't beat them, you join them. So we put string here. So now our number 11 is going to be string. Let's hit apply. See, now we have our month, the dash, and now we also want the year. So we're gonna hit plus string again, month again. No, we want month. No, we don't want that. We want month. There we go. Transaction date. Need one more. Let's hit apply. And that's how it looks like. Apply. Perfect. That is what we wanted. And now we're going to call this date text. Perfect. I can remember that name. And I'm going to copy this. Hit apply. Okay. Now with that, we did it on our Chase Freedom. We're going back to our sheet 4. Go to our banking. Go back to our data source, and now we have our banking data. And now we're going to do the same thing on our posting date. And we're going to click create calculator field. So we're just replacing the name of the columns. We're doing the exact same thing, but I wanted to save time. And in order for our calculations to be automatically recognizable, we're going to have to call them the same name. So date text. Perfect. Date text, calculation. See? ABC, that's how you know it's a string. So now we're going to go back to our graph. And we are going to see if we could link it together. So we're going to click the link again, and now we're going to put our amount again and see what happens. Perfect. Our amount it got recorded. I guess it doesn't have any transaction data before November 2019, so we're going to have to edit that out. And we're going to make this a line. We're going to combine these together. Wait, no. We only want this as a line. So let's go to our sum account. Our second one. The only reason I know it's the second one is because it's 1, 2. All right. Now that we have that, we could probably merge these together by joining the axes. So dual axis. I like that color. Thank you, Tableau. I would have never thought of this. I have no idea what that means. Perfect. And we're going to have to realign these together again. And another way of doing this, besides, dragging this axis to the other one, would just be synchronize axis. Perfect. So now we have a graph that combined two data sources. And in our first data source, we have our banking account information, our money in and our money out, cash inflow, cash outflow. And we can also see our net balance for each month for our credit card transactions. So as you can see, for the most part, we were pretty solid, except for December 2019. That's when I quit my first job, my first full-time job, my first real job. I consider that my first real job. And then I became a data analyst at my current job and had more disposable income. So I paid off all my credit card debt, except that I moved into a new place. I was very foolish. I moved into a luxury apartment, but it was not worth it. So I immediately moved back out and I started, paying off debt and saving money again. So the light green bars show us our debit account transactions. So that could mean anything from rent to, ATM withdrawals. And our light blue are account transfers. And I know this doesn't show in the graph, but I know that my account transfers are all the money that goes into paying debt. So it could be either be credit card debt, auto insurance, auto bills, things like that, any type of debt. So that technically counts as savings because you're paying off debt. And that is pretty much a summary of my finances for that month. Okay, so that's pretty much it for the analysis of real world transactions we're going to do for today. However, we are also going to show you the final way of merging data together, which is joining data. And we're going to do this using fake data. So we're going to create, let's name the sheet first. Let's put this name as Consolidated Account Analysis. Let's make it sound fancy. I don't know what this means, but it sounds really fancy. Probably means something else in accounting. Oof. But yeah, let's not use that terminology anywhere else. It does sound like big words to put on a resume, but you gotta check that in with Google first. Make sure it makes sense. Okay, how do joins work? Let's look at our Excel files for example. Okay, here we have two files. In our first file, we have our name column, our age column, and our account number. See, we have 4 people in our name column: Pablo, Mary, Megaduck, and Bill. And in our second column, in the second table, we have our account number, balance, and bank. So notice how these two tables are different. However, they have our account number column in common. So pretty much what a join does is that it gets the information from here and gets the information from here and finds a common identifier to join the data, which is the account number. So depending on type of join, if it's an inner join, it's probably going to get all the information from the left and all the information from the right and add it together. So we're going to have mismatched columns. So for this one, we're going to have 5 rows, right? So we're going to have Pablo, Murray, Megaduck, and Bill, and we're going to have Angus over here. But however, our Bill is not going to have anything. So it's going to have no for these rows, and Angus is going to have no for here. If we use left join, we are going to populate information just using our rows from our left account. So we're not going to get anything extra that is in here. And the right join does the opposite. It gets all the information. It is going to include all the rows from here, but not necessarily all the rows from here. So let's do this in Tableau. So we're going to go in data. We're going to click new data source, Microsoft Excel, and put fake accounts, open. And now we're going to add another connection, Microsoft Excel, put fake people, open. All right. Now we're going to join this by double clicking and putting that's a bank account and our peoples together. So we're going to put both information in here. And see how it automatically already joins the information. You can look what field it joined in by clicking the circle, and it shows us that we have an account number. See, it automatically recognized. So inner join, it just uses both tables. Everything has to be filled out. See, but it doesn't have the total number of rows, right? If we put full outer, we'll have, see, that's the nulls that I was talking about. We'll have 5 rows. So let's go back to the left. Okay, inner join pretty much gets all the information that both accounts have in common, right? So it's that highlighted part in the region that gets included in our data. Our left join just includes the rows in the left and looks for that information in our right table and includes it. So we have Bank of America, Chase, DocuBank, Angus. So I guess we're doing it by banks. The banks are in the left and our peeps are in the right. So our people, see, we have one more person that's not included. So let's say we want to do it by people, right? So we're going to do a right join, include all the people that we know. Pablo, Marie, Megaduck, Bill, okay? And we're going to have notes for this one since we don't know what bank Bill is from. I guess he has no money. Bill's broke. All right. See, now that's pretty much the final join that we didn't get to use for this video. And I think this is very useful in SQL if you get to learn it, but for the intents of this analysis, we're not going to use it. Thank you so much for watching, guys. I hope you found this video helpful. I hope you have the confidence to use this in real world and show people what you can do. And shout out for Josue for watching my last video, man. Appreciate your support. All right, take care, guys.